Oh man, so things are getting more and more uglier each hour. What is going on in the markets? Bitcoin has lost that key channel, breaking below 28,600, Ethereum below 1,500. Peak fear feels like it's here. But like I said, people don't realize how bad this could get. And I'm going to remind you of that today. We've got inflation fears, which we've known for a while. We've got the state ETH versus ETH depeg, which we spoke about yesterday. And on top of this, you've now got risks of Celsius, one of the biggest lending and borrowing platforms, now going insolvent. What is going to go on? What should we be doing? What should we be worried about? We're going to break all that down in this video. Make sure you smash up the like button and subscribe. Today is the last day of consensus here in Austin, Texas. I'll be flying back tomorrow, so I'll be in my normal setup. But it's important for me to jump on to give you guys the updates because we've had a big movement here. We were in this channel for a long time. Let's just go across into the 4 hourly so you can see this. And we were in this channel for a long time, right? We were trading up and down, up and down, up and down in here. Couldn't get the breakout properly to the upside. And then I kept reminding everybody that whilst we're in this channel, I'm not going to lose focus of the price point at 26,200. That is the price point I kept. And you can see we're now breaking down from the blue channel and we're heading to the downside. We've wicked as low as 27,100 here, and I continue to remain that the price target will be around 26,256 on the downside. So we have to have ourselves prepared for these price movements. And I told everybody in the course member live streams, I told the people in the Discord, watch out for this. And again, if you want to join our course member live streams, ejars.uk/member. If you guys shorted this to the downside, congrats to you. I personally don't short. You guys can. If you want to go ahead and trade any of these moves to the upside, to the downside, you can do so on BYBIT using my link. So check that out. Links in the description. You're going to get up to $4,000 in BYBIT. Don't forget, they are doing their World Series of Trading as well. So you can join that and win up to a prize pool of $8 million, which I'm a team captain for that team. So the team will split based on everybody's trading performance. So do check that out as well. So we're breaking down here to the downside. But the thing, this is just the start, guys. And this is the worrying thing, is when you start to get to these levels, it feels like peak fear. It feels like FUD. It feels like this should be it now. But when I'm sitting here, I'm looking at the analysis from a fundamental perspective, I can't give you guys any hopium because there is none at the moment. The global slowdown only seems like it's going to get worse. I'm preparing myself for an even longer crypto winter. We're probably in a recession already. If not, it's going to get deeper, the recession. Inflation's not under control. I can't see inflation really having a meaningful inflection down until September, October time. Even then, it's going to take a while after that, many months after that, before inflation comes to a neutral rate of between 2 and 3%, which is just neutral. So, you know, I can't give you guys the hopium, say, oh, it's fine. You know, these are the lows now. These are the bottoms. We're just going to fly to the moon now. And I've said that for a while. There's no evidence to back up the fact that we could have broke from here and ran all the way to the top, other than a technical move. There's nothing from a fundamental perspective that brings that confidence to the market. And if you look at Ethereum, Ethereum is taking a complete hit too. Okay, so Ethereum is probably getting hit, bouncing now to, well, it's not really bouncing, but it's heading now towards this critical level, our support level at 14.15. If I go to the daily chart on Ethereum, it's going to put things into perspective of how quickly we've pretty much given up everything from Ethereum's all-time highs all the way up over 4,000, now down to 14.15. And if you lose this level, things get pretty ugly, not just on Ethereum, but on Bitcoin as well, because you can see once we lose this support, you really do start having clear space to fall more to the downside. And that's the issue with Bitcoin on the daily chart as well, right? When you look at Bitcoin on the daily chart, if you lose the level that we're at, let me just go to this chart, the messy one. If you start losing this level, you then got to start bringing in 24,000 into play as the next major level of support. So that's how nasty things can get from a technical perspective. Now, let's try to understand what's going on. I mean, we spoke yesterday about the US Treasury yields. We spoke about inflation. I'm not going to reiterate that. Go watch that video from yesterday if you want to understand some of the macroeconomic challenges. But what I do want to speak about is I want to speak about the peg, right? So we spoke about the peg yesterday as well, and again, go watch that. But the peg is still an issue, and that's one of the reasons Ethereum is down today, is that we've got staked ETH and ETH peg causing some problems on Lido. Now, the issue with that is when you start to get a run on these things, it can cause a self-fulfilling prophecy where if people are worried and they want to get their ETH back, this then causes a problem. And one of the biggest issues we've had is with Celsius. So I want to spend a couple of minutes going through what's going on with Celsius. Celsius, one of the biggest lending, borrowing platforms on Ethereum. and you can see how they're now starting to struggle. So the first thing is, just want to quickly run through the issue here. Now, the first thing you want to understand is rehypothecation, right? We've spoken about this. This is what these companies do. And guys, you're going to notice a pattern here. And I want you guys to spot these patterns, because I remember at the time, everybody was telling me to lock up my money in Anchor Protocol. Remember Anchor Protocol on Terra Luna? And I stayed away from it because my mother taught me when I was growing up, if it sounds too good to be true, it probably is, right? So for me, I'm not going to go ahead and stake, and I never did put serious or any money in Anchor Protocol, because when you see those yields of 18%, how do you think it's coming? It's coming from rehypothecation. It's coming from this concept which traditional finance has been through and learnt about, but for whatever reason, crypto and the crypto industry want to go and fall for the same mistakes instead of learning from TradFi and being better than TradFi. And this is the element that frustrates me. Derivatives, leverage. We spoke about leverage and how I hate leverage. I mean, not only have we not learned from traditional finance, I feel like the crypto space has an even more unhealthy relationship with margin and leverage than traditional finance does. Crazy. When you look at rehypothecation, this is what the banks would do all the time. When you go and deposit your ETH, I mean, this is the same issue with staked ETH, right? Think about it. Just think about it from a common sense perspective. When you go and stake your ETH for staked ETH, what are you doing? What is this liquid staking? You're doing it because you want to make yield over there, you want to lock your ETH over there, but you also want this staked ETH asset so you can go make more money with it. Does that not just sound greedy to you? Like, pick one or the other. What's wrong with you? Like, that's why these liquid staking things just don't sit right with me. It's when you're just becoming over greedy to try and make money on money on money, where it's like, this is a house of cards. This is going to fall down. This is not going to end well, because one, it's going to become so many degrees of complexity that not the average person cannot understand this. And you're going to see this when we go through this. The average person cannot follow this. So it just becomes super inefficient, non-transparent, and very over-engineered to confuse you, and therefore you shouldn't be investing in it, right? Very straightforward. It becomes complicated. So this rehypothecation problem with something like Celsius, you put your money in to earn your crazy yields, right? You want to deposit your ETH to earn 6% or USDC to earn 7%. Celsius go and lends that money out, your collateral. So yes, they're collateralized, but they go and lend it out because they want to make money on that to justify why they're paying you 6-7%. Do you see what I mean? So this causes the issue, and this is the rehypothecation problem that is not new. We saw this with fractional reserve in the existing banking industry, and it's nothing new. But we're going through that learning curve again in crypto. And unfortunately, you should have learned from traditional finance to be better. You should have to go through all of this and put your community through this for no reason. So the first fact, just wanted to run through this article, is that Celsius did indeed lose 35 million ETH on stakeout, okay? So that's affecting some of their liquidity. Now, we also noticed they lost 50 million in the Badger How hack. But we also, this fun fact, well, not fun fact, but the main fact here is fact 3, which is Celsius has 288,000 ETH staked in an ETH 2.0 contract. Okay, so let's cover this off here. Now, this doesn't seem like a bad thing, right? The merge is coming, right? The guy says here. But here's the thing. The merge hasn't happened yet, and we have no idea. I've said that as well openly on this channel. And while we wait, the deposited ETH earns 0. This is the important bit, guys. When they're paying, so you're depositing ETH into Celsius, they're paying you 6-7%, whatever it is, right? Now, they need that ETH to be lent out so they can make money on it, which justifies what they're paying you. But if they put it in ETH 2.0, waiting for the merge of the beacon chain with the main chain, they're making 0 on it. This is not great for them. They're illiquid, right? In other words, are they trading insolvent? This is what we need to understand. We've seen numbers saying that 280k, 8k represents 22% of their total ETH holdings, but we believe it's a smaller percentage than this. But still, do the math, they're paying 6% right now. That means this 288,000 ETH is costing Celsius 17,000 ETH per year. Okay, so it's not cheap. And you can see a tweet, this is a tweet chain from Yield Chad, which you can go and check. Celsius is functionally insolvent on their ETH position. Only 27% of Celsius's ETH is liquid. The rest is either staked ETH or ETH staked in ETH 2.0. So inaccessible for at least 1 year. Now, what's the problem behind this? This is the same problem we've spoken about at length with stablecoins, and continues to be one of my biggest fears for crypto, is these kinds of projects. The Terra Lunas, the Celsiuses, the stable coins such as USDT, which I don't quite understand why they're not collateralized in a safe enough way and it's not regulated. This is why I'm pro-regulation. I'm happy with some of the aspects in the bill, because what's happening here is you don't know how accessible, how liquid your collateral is. So if everybody now becomes fearful, whether it's a FUD article, whether it's a true article, it doesn't matter. If something creates an emotional response for everybody to go and take their ETH out of Celsius, you will be unable to get your Celsius. Sorry, you will be unable to get your ETH back. Everybody will not be able to because they don't have that liquid. Okay, and that's the issue here. That's what the problem is. And you guys can go ahead and take a read of all of this. Okay, then we also know, fact 4, they are raising money in a terrible environment. And the main point to mention here is a lot of these projects in bull markets get away with messed up structures. Okay, you're doing this kind of, I wouldn't dare say, I'm not calling Celsius a Ponzi, but companies can get away with Ponzi-like tactics, okay? But the problem is, in a bear market, when liquidity is really strong and price points are really coming down low, it becomes very, very expensive for them to maintain this cycle. And that is why a lot of these companies will start to get exposed in a bear market. So be very, very careful. Now, here you go. Celsius lacks liquidity that they have to borrow to pay customer redemptions. Okay, so again, redemption, you're going in, you're saying, give me my ETH back, I don't trust what's going on. They're having to borrow it, okay, to come and cover it off to say, no, nothing's wrong, we're good here, right? And we've seen issues around this. We saw they did a hodl mode, right? They have a hodl mode active. Let's see if I can find that. Here you go, hodl mode is active. Now, with respect to him, Alex did go on to a couple of shows, I think, in crypto YouTube to say, look, this is a feature to protect users, but I wouldn't be surprised if they turn this on sometimes to buy themselves some time. We know exchanges do this. If we see a huge run on a certain coin, places like Binance can stop withdrawals, other people do as well. And the reason is they need to buy themselves time to get their deposits. In this case, they have to go and borrow, right, to go and give you the money which you want to redeem. So they'll go buy ETH and give it to you to say, oh, look, nothing's wrong. But the problem is that as the market's going down, ETH is falling, that's going to have more effect on these guys, okay? So this is a big problem in the whole space because ETH now falling due to the peg can then cause problems for redemptions on a platform like Celsius. So let's wrap this up, guys. A lot to be worried about, but right now the key message from me before I get back to my desk and we can spend longer time looking into these things is I personally would not be in these types of projects, right? Very, very straightforward. It would not be worth me locking up huge amounts of sums for 6% when we've seen something like Terra Luna come to pass. Now, if it turns out that there's nothing wrong with Celsius and they continue on, fantastic. I don't want people to lose money and I don't want them to go in bankrupt just to prove a point that maybe I thought that was right. All I would do is I take my money out in a safe environment and make sure I'm not in those types of plays, and that's it. And then I wish them well, right? That's as straightforward as me. For when things like that don't make sense or there's an over stretch for greed, it raises a red flag in me. Anchor protocol, these kinds of things. It's okay. Just invest safely. Trade if you want to trade. Dollar cost average into long-term projects if you want to do that. That's the key. So overall, guys, really tricky time for the market right now. Stay level-headed. Don't panic sell. Get ready for a long period like this. And right now, I would be focusing on, we're going to be talking more about with our course member lives at jars.uk/member. You guys can join those weekly live streams. We're going to be talking a lot more about income because we have to go and get income. The ones who are going to do best in this market while the prices are low and suppressed for a while are those that can get their income streams right and continue to bring more money into crypto. If you just got one lump sum you're playing with in crypto and you're trying to almost trade it and reallocate it and move it around, that's not enough. You need new cash flows and streams of income which you're consistently using to build out a bigger and bigger pie in crypto, which when it grows, when it emerges in the next bull run, really does become a substantial piece of wealth. Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. I'm going to leave a playlist of binge-worthy videos for you guys to go watch. Go watch those as well. And I'll see you in the next one.